So you guys, I received 7 dividend payments in the month of October, and we're going to go over all of those. And in between those, I'll give a little bit of my insight into my overall strategy and philosophy of investing. I think it'll be helpful for those of you who are newer to investing, and you don't want to miss out on any of those little golden nuggets. Also, let me know which one of them is your favorite down in the comments, or what your favorite ETF is. I will be responding to every single comment. So without further ado, let's look at that first payment that I received from the largest holding in my portfolio, and that's going to be from the ETF VOO.
VOO is Vanguard's S&P 500 ETF, and it is the largest position in my portfolio. Here on Snowball Analytics, you can see that it makes up about 57% throughout all of my portfolios, and it's had some very impressive returns over the last year and over the last 5 years. But as we are talking about the dividend payment, the annual payout is $6.77 per share and has a dividend yield of 1.27%. And as you saw, VOO did pay me $61.35 for the roughly 39 shares that I do own. VOO makes up such a large portion of my portfolio because when I first started to invest, I was really focused on growth investing, not so much focusing on dividend income. And now, as I'm more of a hybrid, VOO is slowly becoming half of my portfolio, and that's kind of where I'd like to have it stay. VTI paid me $5.36 for the roughly 6.16 shares that I do own. VTI is Vanguard's total stock market index fund. This is trading at just under $290 per share and has a very similar dividend yield to VOO, sitting at 1.3%, but it does have a little bit higher of a 5-year dividend growth of 4.41%. As you can see right here, VTI is not the largest position of my portfolio, but it does make up just about 5% of it. VTI has had some very impressive performance over the last 365 days. They're up just about 40%, but unfortunately, this is the last ETF that paid me a dividend in the month of October. So let's go ahead and take a look at Coca-Cola. Coca-Cola did only pay me $1.61 with their 2.96% dividend yield. That does come out to just under 50 cents a share, but I've only purchased 3 shares in my lifetime of Coca-Cola, and you can see right here I'm basically at 3.33, which is about a 10% return on the overall number of shares that I have. Year to date, Coca-Cola had been performing really well, getting up to about $73 per share, but we have seen a almost $10 pullback on that, which is kind of making me think I should be adding to my overall position, just as we see that lower price. And Coca-Cola is one of the best dividend paying stocks, in my opinion. One of the big reasons is Warren Buffett's Berkshire Hathaway has a lot of Coca-Cola, if you weren't aware, but their dividend yield is sitting right about 3%. So for every $65.56 share that you buy, you're going to be getting $1.94 paid back to you every single year. And they have about a 4% average dividend growth rate over the last 5 years. And they've been paying dividends for 21 years, which is such a long time to be consistently paying out dividends. One of my philosophies when it comes to investing is always make sure that you're investing in something that you think will still be there in the next 10, 15, 20 years, whatever your overall investment horizon is. And I think Coca-Cola is definitely one of those companies, considering they're everywhere and they are a superpower when it comes to their industry. Now, this next company doesn't quite hit the 21 years of dividend growth streak that Coca-Cola has, but it does have a 15-year growth streak, and it also has a dividend yield that's more than twice as high as Coca-Cola's. So let's take a look at Altria Group. Altria Group is an absolute monster when it comes to dividend stocks. This has an 8.17% dividend yield, and it paid me $17.81, and that's $1.02 per share. One thing that's really nice about having Altria Group in my portfolio is I do have a very low yielding portfolio due to the nature of it being mainly a growth portfolio, but having an 8 point, roughly 2% dividend yield company in the portfolio really spikes things up. Now, overall, in the last year to date, they're up 23.82%, but when you stretch it out a little bit further, it definitely becomes slightly underwhelming. Over the last 5 years, it has only returned 7.63%, but you also need to remember they are paying out an 8% dividend every single year. So they also have some decent statistics when it comes to their overall dividend growth, about 4% on average over the last 5 years and 4% on the dot over the last 3 years. And they do have that 15-year dividend growth streak, like I had mentioned earlier. So if you're looking to increase the overall amount of income that your portfolio is currently producing, I'd recommend adding Altria Group to your portfolio. And one that I would not be adding to my own portfolio is the one that we're about to look at right now, UWMC. So UWMC did pay me $78.17 with a 6.12% dividend yield, but I've actually been closing out of this position. The overall performance of UWMC has treated me really well, but I just don't think it's going to perform as well as it has in the past. Now, for dividend statistics, there's a couple of reasons here. They do have a 6.12% dividend yield, and that means you get paid 40 cents a year, and that comes out to 10 cents per share per quarter. So when I got paid out, I had a little over 780 shares, and I have sold about 500 of those shares. Their amount of their payout in relative to the overall profits they pay out over 250% of their profits, which is being deemed risky by Snowball Analytics, and I completely agree. As you can see, I've been buying UWMC for a very long time at the end of 2021 into 2022, and I finally am deciding to close the position as it kind of did what I expected it to, and I earned dividends along the way, and I think it's finally time for me just to accept that this isn't going to perform as well as I want it to. So I will move my funds into something else like Altria Group, as I had just mentioned, because it does have a higher dividend yield and is very consistent in paying out its dividends. This has to be hands down one of my favorite companies, and Realty Income is just so solid when it comes to paying out their dividends. We'll look at their dividend history in just a moment, but the $7.57 that I received is off of my 28.72 shares, which puts their dividend yield at 5.23%. Realty Income has had some pretty impressive returns when it comes to their overall stock price and their dividend increases. So, over the last 365 days, Realty Income has had a return of about 31%, and year to date, it's only up about 5.21%, which is very close to their actual dividend yield of 5.23%. So, for every $60.41 share that you buy, you're going to be receiving $3.16 in dividend income, and their dividend growth over the last 5 years is at 3.55%, and they have a crazy dividend growth streak of 27 years, which is the same amount of time they've been paying dividends, according to Snowball Analytics. I know their website says a little bit different, but I'm just going off of what Snowball says. And their dividend rating is considered to be okay, and I believe that's just because their dividend payout is a little bit high, but that's how most REITs are going to be, so I don't think that's anything to worry about. Another little tip when it comes to investing is to look at the overall history of the company because patterns tend to repeat themselves, but they don't have to. And Realty Income has an incredible pattern of increasing their dividend and making sure that they have those monthly payments. And especially if you are buying a company for the dividend payments, you should make sure that they're consistently paying them, which Realty Income definitely is. And the last company that did pay me a dividend in October is the newest position in my portfolio. It did only pay me 50 cents, but I'm super happy that I did add it to my portfolio because I wanted another monthly payer, and that is going to be Main Street Capital. Although Main Street Capital did only pay me 50 cents for the two shares that I do own, I think it's worthy of looking at the overall statistics and why I added this to my portfolio. So, the first reason is because obviously it's a monthly payer that has a 5.73% dividend yield, and it also has some pretty impressive dividend growth considering the nature of their business. And in the last 5 years, that has been just about 5%. So, with all of those added up, I made $172.37 in the month of October. So, let's take a look at what I'm expected to make in next month during November. As we can see up here, November is expected to be a pretty slow month, bringing me in about $25, or more specifically, $24.66. I'm expecting a few payments from CVS, AbbVie, Main Street Capital, Realty Income, and Procter and Gamble. And then to close out the month, I should be getting a payment from Kenvu, and finally Starbucks, who just announced that 7% increase on their dividend payments.
My last really important piece of advice is to be as consistent as you possibly can when it comes to investing. It'll compound far more than you're expecting it to. And if you enjoyed today's video and made it all the way to the end, I'd appreciate it if you were to click the like button and subscribe to the channel. It means a lot to me, and it's really cool to have people follow me on my journey. And if you want to see what income I made last month in September, go ahead and check out this video right over here.